morning, traders. This is TK over at ReadySetFutures and ReadySetFutures.com with your daily market preview for 15 September 2016. Let's get into the headlines really quick. ES looking at a big day today here in the USA. Gold starting to roll over. Copper retesting resistance from the top side. And crude expecting a sleepy day after our inventory report mayhem yesterday. And with that, let's head over to copper. So as you can see, copper yesterday, we traded up and through our resistance line here, our resistance trend line on this most recent move down. A couple days ago, we looked at copper a bit in detail, and we were looking for a number about 21575 as a key area. The reason was it was our volume weighted average price on this move down. You can see we traded a bit through it, and now we are selling off. I don't want to get too excited here, traders, because we do have this pretty significant low volume node to chop through, or at least to find acceptance in. And we also now have what was our resistance line may act as support on the way down. However, you can see I put up a second volume profile for this instrument showing the upper value area down here at $2.11. That's going to end up growing as we begin building volume up here. That value area will begin to spread. But you can see, so we'll find equilibrium somewhere up here, or we may not, or price may find a better place further up. Just depends on how much trading actually does happen in this region and how much acceptance price finds. Now, the next move for our volume point of control would be up into this volume node. That's just the natural place for it if price begins to find acceptance, and then we have further resistance at the top side. So that's copper for the day. We'll see how it trades. Moving on to gold. As you can see here in gold, we've got a number of attempts at the lower value area. The lower value area boundary over here, and then yesterday's action was an up day off of that value area low, meaning we're beginning to find acceptance here in a tighter range. Gold for us, in my opinion, gold's going to head lower first before it heads higher. We've talked a number of times about consolidation, move, and now we're in another consolidation period, and actually that consolidation period has lasted about, we're going on 2 months. Significant wind up. We could find gold breaking out of this range to the bottom, to the low side. A lot of it's going to depend on next week. What the Federal Reserve does. So, keep your eye on this. We may bump down here to that 50% retracement at 2190, or possibly lower, 2170. If it's, here's our 70% line. We've talked about that a couple times this week, 2160. So take your pick, take your risk, and it's up to you where you put your market. That's if you are on the long side. The short argument, and again, in any of these instruments, there's an argument for the long side and there's an argument for the short side. As a trader, you need to understand what you feel is the most likely outcome, and only then will you make a decision whether to take a trade, among many other considerations. I just want to put that caveat out there, guys. It's not as easy as drawing a bunch of trend lines and Fibonacci retracements and hoping for the best. But just really quick here, one thing I'm seeing is a downward sloping channel on gold, but as we entered from the top side, we may continue higher. Again, I do expect us to check this tail, to check this swing low before we find acceptance. Moving over to crude oil. Yesterday we had our inventory report from the EIA. Gasoline production far exceeded what the expectation was, while oil inventory actually beat expectations on the low side. As you can see, the end result here was a sell-off in crude. But a sell-off down to where? Down to that lower value area again. These are important levels, folks. This is acceptance. So generally you accept in price right now for oil anywhere between $47.70 and $43.50. You may say, well, that's a $5 range, $4.50 range. If you're not day trading oil, that's not that bad. If you're day trading oil, that's a fortune. It just depends on what your time frame is. In any event, we're down here in this high volume node looking to find out what business needs to be done. I expect oil to check this swing low here, and I expect oil to check this low volume node here in the 44.30 to 44.60 range. So we may see a bit of back and forth today in oil. Keep in mind, Baker Hughes rig count out this afternoon, 11 p.m. Pacific, 1 p.m. Eastern. That may have an impact as we look at oil production overall. Globally, oil production is at an all-time high. Russia, the Saudis, just cranking it out. Where in the U.S., rig count has actually declined quite significantly since 2014. In any event, that is a meaningful number for the market, and we could be choppy. We could have a sleepy day until that number comes out. Moving up to the ES trading a bit higher in the overnight. We can see coming down out of our range. We had a great 61.8% retracement right here on the day after, and we have traded lower. I took a short position around 21.30 during yesterday's trading, and I'm still on it. My target is just above this high volume node from the Brexit run-up. About 2096, 2098 is where I have my target. You do see we're trading a bit higher. I'm going to pop up a second volume profile that looks just at this market action here since our trip down. Perfect. You can see our green line may not be too visible to you guys. It's at 21.2250. Interestingly enough, the volume weighted average price from yesterday's action, including the overnight, is also at 21.22. Well, I'm looking at it 21.2225. And we've come up to it and we're selling back lower. Now, price begins to approach it. We're going to draw another profile at the start of trading today to see where the action ends up. But for us, like I said, I have a short position on, targeting around 2094, 2095. Today's data, quite significant. There's a lot of it coming. This is likely to be up after that data. And I've talked about that in the past couple pre and post market discussions that we've had. So you guys are aware of the amount of data coming out today. Tomorrow, quad witching, and then next week, Bank of Japan and the Federal Reserve Board. So a lot of action happening, a lot of news, a lot of external forces playing out in the marketplace. So traders, beware. That's our warm up for the day. It's the 15th of September 2016. TK, ReadySetFutures.com. Go ahead and give us a thumbs up. Go ahead and subscribe. We really appreciate all of that. Feel free to leave us some comments. If you like what you're seeing, you don't like what you're seeing, you think a different format might work, if there's a particular market that you'd like me to take a look at, by all means, go ahead and leave that in the comment section, and we'll try and incorporate your feedback as best we can. So I just ask you guys keep it constructive, and I know you will. So with that, traders, best of luck today, and we'll check you in the evening.